Welcome back to Financial Health, everyone. Brought to you by John G. Ullman and Associates, President and COO Jason Nickerson with us this week. And Jason, we are talking about interest rates. The Federal Reserve recently decided to lower interest rates by a quarter of a point, made major headlines. However, some of our viewers may not fully understand the impact of a decision like that. So can you help us understand how this may impact our day-to-day finances?
Yeah, of course I can, Renata. And I'm going to skip a lot of the high level economic speak because I feel like that can just not really explain the real story down to the impact on people like you and me and what that really does for us in our day-to-day lives. And there are multiple impacts. There are some that are positive, some that are negative in our day-to-day money dealings, but there's also a psychological or emotional impact. And some of this just depends on what the path forward looks like. It certainly is signaled that we may get a few more of these interest rate decreases. So the question is what action should we be taking now, or maybe some actions that we wait to take to see what the path forward is. But I look at this really kind of on two sides, very basically. For those that have cash in the bank or in cash-like instruments, the very first impact we saw within about 24 hours was banks and other financial institutions lowering rates that they're paying on those different savings vehicles. It was almost immediate. You could open up your bank account the very next day and see a rate decrease on your savings account. Now, it sounds like the Fed plans to continue to lower rates. And it's something that, depending on what that cash is intended for that you have in the bank, is how we deal with this, right? If this is that emergency savings account that we've talked about before, it's just something that we have to deal with day to day, because we could think about, well, should I be investing in and locking this into a longer term CD now? But the problem is that we may need that saving short term. So it's just something that day to day we're going to have to deal with and accept the fact that the rate on the savings is going down. You can certainly shop around to other banks for better rates, but rates will flip-flop between banks. You may end up right back where you were before. Now, if there is cash on hand that is meant for longer term situations or goals, certainly looking at a longer term CD might be an option where you can lock in that rate, again, because the Fed kind of signaled that there may be more of these rate decreases into the future. Now, that is the negative side. On the positive side, loans and borrowing money get cheaper, right? That's when it comes to us, we think about first, usually our mortgage rates can come down. So if there are people that are kind of sitting on the sidelines waiting to buy that home, they're thinking now emotionally, wow, this is a great time because rates are coming down. But we need to think about that, because if the Fed does continue lowering rates, maybe there's a better opportunity in the future. But what also is a positive out of this is really for the overall economy. See, when we have a healthy housing market, that can actually create more economic activity, because, as we know, buying homes, people go out and buy other goods and services that go along with that. So this just doesn't apply to us, though. Businesses can borrow at cheaper rates and refinance loans. The issue that we have to keep an eye on is the larger impact. See, because as money gets cheaper to borrow, that can cause higher demand. Higher demand can spark inflation. And that's what the Federal Reserve has been trying to fight over the last few years by keeping rates high. So really we need to be mindful of both sides of that conversation.
And, that's something that you and I have talked about before, just kind of the thought process that the Fed goes through in deciding to raise interest rates or lower interest rates. There's a much bigger picture involved in those decisions.
That's correct. And, I guess, the theme is what side of that conversation do you sit on? Are you looking to borrow money? You're probably pretty happy about this. If you're on the savings and investing side, maybe you're not as happy about this because you're seeing those savings rates go down. And at some point, investors that have those types of savings, they start looking at it. If rates continue to drop, that there could be a longer term impact where they make another decision, which is, hey, I'm going to need to get a better return on this money. So they start looking at other vehicles and other places like the stock market.
Okay, well, there are many tentacles to the Fed's decision. And Jason, I guess we just need to sit back and watch and check in with you periodically about this topic.
Yep, that sounds like a good plan.
All right, Jason. Well, thank you so much for joining us for this week's Financial Health. We'll see you back here next week.
Yeah, we'll see you next week.